Greetings. You're welcome to Prekani Trading Networks. I want to really welcome you and to say very big congratulations for taking this bold step. And I promise that at the end of your training, you're not going to regret anything at all. Welcome to Forex 101. Hello, meet Anya Somodabuchi, trader investment analyst representing Prekani Trading Networks. Take your time, learn the skill that will pay you for the rest of your life. In order to get started, you need to have one thing in mind. I am a student always. Do not compare yourself with anyone else's progress. Always keep a winning mind frame and you will do well in this business. Upon finishing this lesson, you should know the answers to the following questions. Intro to Forex. History of Forex. What is Forex? Who controls the Forex market? Who is a market maker? The business of Forex trading. Forex trading sessions. Who are the major partakers of Forex? Who is a broker? So let's talk about introduction to Forex. And like I said, do not hesitate to ask questions when necessary. And one of the ways you can do that is to write to our support. Alright? Ask your question and your questions will be answered immediately. And secondly, during my live session, alright, do not hesitate to ask questions when necessary, as I am saddled with the responsibility to ensure that you get the right answers to your question and you have better understanding. Once again, I welcome you to Prekani Trading Network. Let's talk about the introduction to Forex. If you've ever traveled to another country, you usually have to find a currency exchange booth at the airport and then exchange the money you have in your wallet into the currency of the country you're visiting. You went up to the counter and noticed a screen displaying different exchange rates for different currencies. You find the naira and think to yourself, wow, my $1 is worth 1,600 naira. And I have $10, for instance. I'm going to be rich. This excitement is quickly killed when you stop by a shop in the airport to buy a tin of Milo, and all of a sudden, half your money is gone. When you do this, you have essentially participated in the Forex market. You have exchanged one currency for another, or in Forex trading terms, assuming you are an American visiting Nigeria, you have sold dollars and bought naira. Before you fly back home, you stopped by the currency exchange booth to exchange the naira that you miraculously have. It is this exchange or changes in the exchange rates that allows you to make money in the foreign exchange market. So Forex is all about exchange of currencies. When you hear the word Forex, alright, it talks about exchange of currency from one country to another. Let's continue. Now let's talk about the history of Forex. Forex trading started during the time of the Babylonians. This system was designed for the currencies and exchange. In the early times, the goods are being traded for another tangible item. When the metal age began, gold and silver became the tool of transaction. This idea became popular during that age. The creation of coins started then, as well as the political regime, when gold became an important trading tool. Its use became restricted. Therefore, the result which has been brought about by this is that the value of money has diminished. A great panic happened then because people would like to exchange the value of the money for gold. In 1931, the gold standard was removed and the Forex market was burned, although people used to have a very small or no notion at all about it. Forex exchange or foreign exchange was introduced so citizens will have more monetary stableness and reliability. Through the initiative of the USA in July 1944, the new world currency was initiated with the use of the US dollars. During those times, IMF, World Bank, and GATT were formed and agreed upon at Bretton Woods. The agreement was comprised of the gold standard, which would be equal to $35 per ounce. Other currencies were also fixed with this standard. The reason for this is to avoid destabilizing the monetary crisis. Now, what is Forex? The modern forex trading began in the early 1970s when the USA allowed its currency to float freely in the forex market. However, forex trading has been around as long as international commerce. Now, what is forex? Forex is a short form or an acronym for foreign exchange. It's the global marketplace where currencies are traded. It's a decentralized market where individuals, companies, and institutions buy, sell, and exchange currencies with the goal of profiting from fluctuations in their relative value. It runs electronically between a network of banks. It operates 24 hours a day and 5 days a week. The foreign exchange market, which is usually known as Forex or FX, is the largest financial market in the world. The New York Stock Exchange trades about 18.9 billion per day on average and is the primary liquidity event for institutional and retail investors. The foreign exchange market as at 2024 looks absolutely ginormous with over 7.51 trillion a day trade volume. So it's very obvious that the forex market can make everyone rich, and that is why you need to understand the skill and build your strategy therein. The foreign exchange market is a globally decentralized market for the trading of currencies. This market determines foreign exchange rates for every currency. It includes all aspects of buying, selling, and exchanging currencies at current or determined prices in terms of trading volume. Now let's talk about the business of forex trading. I think I'm going to take some time to explain these terms so that you will understand why you should trade forex. Forex is like every other business where you buy goods from the producer or wholesaler at an affordable price and sell on a high price in order to make some reasonable profit. Example: you bought a can of Pepsi at 150 and sell to the highest bidder at 250. Your profit is 100. This is exactly what happens when trading forex. Forex is one of the best business you can get into for few reasons. So I'm going to be highlighting just few reasons why you can go into forex and still be successful in this business if you apply what is required of you judiciously. You are really going to be profitable in this business. Number one is minimum investment. Forex trading is one of those business that you don't need so much money to go into it, even though huge capital also impacts directly in your trades. All right, but when you're starting this business as a forex trader or as an average Nigerian out there, you only need a minimum of $20 to $50 to start up this business, unlike every other business where you have to consider a lot of things. You have to put into consideration tax, you have to put into consideration the place, the price, promotion, you have to put into consideration shop rent and other expenses that you might incur, all right, trying to start up a business. But forex trading, all you need is your skill and your capital. As low as $20, you can make profit in the forex market and scale up from there. Like I said, capital is a huge influence. Huge capital is a big influence in this market. But I'm telling you that you can start as low as $20 to chase your forex trading career if you know what you're doing. Then another thing is minimal time. Other businesses take your time. Some of you go to work, 8 hours a day. Sometimes you guys take 12-hour shifts, sometimes 15-hour shifts. But in forex trading, if you can invest as little as 3 to 6 hours daily into this business, you are still going to make it. Honestly speaking, this is one business that gives you time. I see a lot of persons come up to say that they don't really have time to watch the charts. No, everything has been modernized. Technologies have taken care of all these things. All you need to do is to understand your trading session, know when to trade, take your trade, and then go about your business. All right. So you don't need any office, unlike every other conventional business out there. You don't need any form of inventory. or job employment to start forex trading. These things are not needed. It is a recession-free business. Whether America is in the recession or Nigeria is going on or is going through a recess, forex trading will still guarantee you success. All right. Yes, it is recession-free. It's a 24 hours and 5 days a week market. One of the things that you're going to understand about the forex market is that it's going to make you disciplined. It's going to make you encourage hard work, and you're going to enjoy low transaction costs in all your trades. All right. You don't have to pay any tax or commission as a trader. Yes. Whatever you withdraw as profit is a net profit. Unlike other businesses where you have for you to be able to have a net profit, you need to minus your expenses from your gross profit for you to be able to have a net profit. All right. So, but in forex trading business, whatever profit you make from the market comes to you as a net profit. You don't have any form of control when it comes to trading. So there is no fixed lot size or whatsoever. These things are not needed. And one of the most important things that brought me into this business is the idea that you don't need any customer to trade forex. We all know that every other conventional business out there needs customers to thrive. Those businesses depend on customers to thrive. But hence forex trading is concerned, you can stay in your house from morning to morning if you want and trade the market, the forex market. You don't need any customer whatsoever to make profit from this business. Yes. All you need to do is to sharpen your skill, trade, make profit. Now let's talk about the major forex partakers. All right? Because it is not just the retail traders alone that are allowed to trade forex. There are other big boys in this industry that also partake in the activities of forex trading. Now let's talk about the super banks. Since the forex spot market is decentralized, it is the largest banks in the world that determine the exchange rates based on the supply and demand for currencies. They are generally the ones that make the bid-ask spread that we all love or hate for that matter. So as we continue in this training, or as you continue in this training, you are going to understand what is a bid and ask, or you could still use your Google to understand what that concept means. Another people that also partakes in forex trading are large commercial companies. Companies take part in the foreign exchange market for the purpose of doing business. For instance, Apple must first exchange $8 for the Japanese yen when purchasing electronic parts from Japan for their product, since the volume they trade is much smaller than those in the interbank market. This type of market player typically deals with commercial banks for their transactions. Then we also have the government and central banks. Government and central banks such as the European Central Bank, the Bank of England, and the Federal Reserve are regularly involved in the foreign market. Even our CBN, Central Bank of Nigeria, they also are involved in the forex market. All right. We also have companies. National governments participate in the forex market for their operations, international trade payment, and handling their foreign exchange reserves. Central banks affect the forex market when they adjust interest rates to control inflation. By doing this, they affect currency valuation. There are also instances when central banks intervene either directly or verbally in the forex market when they want to realign exchange rates. Sometimes central banks think that their currency is priced too high or too low, so they start massive sell or buy operations to alter exchange rates. Now let's talk about the speculators. The speculators in this forex market are you and me. We are also known as the retail traders. All right. This is probably the mantra of the speculators. We are in forex to win it. We are in it to win it. Comprising close to 90% of all trading volumes, speculators come in all shapes and sizes. Some have fat pockets, some roll thin, but all of them engage in the forex simply to make bucket loads of cash. Don't worry, once you graduate from the school of forex in Prekani Trading Network, you can be part of this cool crowd. Now let's talk about forex trading sessions. What is a trading session? This is a period of time that matches the primary daytime trading hours for a given locale or location. This helps traders worldwide to know the right time to trade in accordance to their schedule and also know when to stay away from the market. We have four notable Forex trading sessions. We have too many of them, but we have four notable Forex trading sessions. Number one is the London session. Number two is the New York session. Three, the Tokyo session. And number four is the Sydney session. Now let's talk about the London session. London has been the center of trade due to its geographical location. It is considered the Forex capital of the world. About 30% of Forex transactions happens during the London session. It's also the most volatile trading session. Majority of pairs are traded during the London session because of the high liquidity due to high volume of transactions. So the London session, correlates with the Nigerian session as well, which is from 8 a.m. The London session opens by 3 a.m. to 12 p.m. Eastern, which is 9 a.m. to 6 p.m. Nigerian time. Now let's talk about the New York session. The New York City is the major financial center for the United States. The London session overlaps during the New York session, which creates a high liquidity due to more market transactions. So this means that when the London session market is open and the New York session is open, there is high liquidity. When you hear the word liquidity, it means high volume of money being transacted during this day period this market has opened. All right. So when US news is released, it has the potential to move the market, owing to the fact that 85% of trades volumes or 85% of trades involves the US dollars worldwide. Liquidity and volatility tend to lower once the London session closes during the New York session. Majority of currency pairs are traded during the London session and New York session overlaps. Now let's talk about the Tokyo sessions. Japan is the third largest forex trading center in the world, and the yen is the third most traded currency, averaging around 16.5% of all forex transactions. About 21% of forex transactions happens during the Tokyo session. Australia and Japanese pairs usually create some level of volatility due to the Chinese demand. The Sydney session opens around 9 p.m. to 6 a.m. Nigerian time and closes around 12 a.m. The New Zealand and Australian pairs are mostly traded during this session. Alright? So let's talk about who is a market maker. The foreign exchange market has three important categories of players: the bank, the non-banking financial institutions, and retail traders. Retail traders do not have enough financial strength to participate directly in the interbank currency market. They can only trade through two possible means: the market makers and electronic communication network. Now, let's talk about the rules of a market maker. A market maker is one who continuously buys and sells a currency at an openly quoted price in the OTC market. OTC means over the counter. By doing so, a market maker acts as a counterparty to most of the trades made by retail traders. Notably, a market maker invariably trades against the crowd. One of the primary functions of a market maker is to provide liquidity, to provide money to any traded asset. For performing this function, a market maker gets compensated by a markup to the bid and ask price, which is known as spread. You can Google what is Forex spread, but you're going to know about this as we continue, alright? So, this is how they make their profit. So this is the profit a market maker generates for his role in providing liquidity. The price quoted by a market maker is based purely on demand and supply mechanism. Let's talk about who controls the Forex market. The Forex market is decentralized, so it is not under the control of anybody. However, there are four large banks which makes the biggest market in Forex and so are very influential in the market. We have the JP Morgan, we have the Citi, we have the Deutsche Bank and UPS. This might be overwhelming at first, but this is what makes the Forex market so sweet and awesome. Yeah, the Forex market is very sweet and awesome. The market is so huge and the competition between dealers is so fierce that you get the best deal almost every single time. And tell me, who doesn't want that? So, looking at this picture, you can see how decentralized the markets are. It is not under the control of anybody, but we have influencers, we have big players, we have the movers of the market, but not the owners of the market. Do you understand that now? So we have people that influences the market either bullishly or bearishly, or either in an upward direction or a downward direction. All right? Yeah, they can manipulate the market based on the volume of money they are trading, but they don't own this market. The market is completely decentralized. It is not under the ownership of anybody. I hope that is clear. Now let's look at the Forex ladder. Even though the Forex market is decentralized, the participants in the Forex market can be organized into a ladder. The top of the Forex market ladder is the interbank market, composed of the largest banks of the world and some small banks. The participants of this market trade directly with each other or electronically through the electronic brokering service or services, or the Reuters dealing 3000 spot matching. The competition between the two companies, the EBS and the Reuters dealing 30 spot matching, is similar to Coke and Pepsi. They are in constant battle for clients and continually try to one-up each other for market share. The hedge funds, corporations, retail market makers, and retail electronic services, since these institutions do not have tight credit relationship with the participants of the interbank market, they have to do their transactions via commercial banks. Then we have the retail traders. It used to be very hard for us little traders or retail traders to engage in the Forex market, but thanks to the advent of the internet, electronic trading and retail brokers, the difficult barriers to entry in Forex trading have all been taken down. Alright? So before now, we're not allowed to trade the Forex market because we don't have the money required to do this. Before now, a retail trader must have minimum $100,000 in order for you to be able to trade in the financial market. But these days, it is very easy for anybody to trade the financial market. Anybody can trade, all right, with any amount. Some brokers allows minimum deposit of $10, all right, just to give everybody an equal opportunity into the Forex market. Now, who is a broker? Who is a Forex broker? Forex brokers are firms that provide traders with access to a platform that allows them to buy and sell foreign currencies. Transactions in this market are always between a pair of two different currencies. So Forex traders either buy or sell the particular pair they want to trade. Forex brokers may also be known as a retail Forex broker or currency trading brokers. Most Forex brokers firms handle only a very small portion of the volume of the overall foreign exchange market. Retail currency traders use these brokers to gain access to the 24 hours currency market for purpose of speculation. Forex brokers services are also provided for institutional clients by larger firms such as investment banks. Just as you cannot carry out financial transactions without the help of commercial banks, same way you cannot carry out Forex trading activities without the help of retail brokers. Now let's talk about the importance of a broker. Forex brokers allow traders access to the foreign exchange market for currencies. Most brokers service retail clients, though larger banking firms service institutional clients as well. Forex brokers allow clients to trade with very substantial leverage. Forex brokers make money primarily on the bid-ask spread, but may have other ways to do so as well through charge of commissions. All right. So sometimes they charge commissions on the trades in order to generate money, sometimes those commissions are charged during withdrawals when you're withdrawing your profit. Sometimes these commissions are charged immediately you place a trade. All right. So, but these commissions do not affect us. We don't even notice it as forex traders. Yeah, we don't even notice these commissions. Yes, sometimes they are even less than 0.23% as the case may be. How forex brokers make money? Forex brokers are compensated two ways. First, through the bid-ask spread of a currency pair. For example, when the euro US dollars pair is priced at 1.20010 bid and 1.20022 ask, the spread between these two prices is 0.00012 or 1.2 pips. So when a retail client opens a position at the ask price and then later closes the position at the bid price, the forex broker will have collected that spread amount. Secondly, brokers may charge additional fees. Some may charge a fee per transaction or a monthly fee for access to a particular software interface, or fees for access to special trading products such as exotic options. However, competition among forex brokers is very intense, and the majority of firms servicing retail clients find they must attract customers by eliminating as many fees as possible. This has led many of offer free or very small transaction costs beyond the spread. I am a student always. Don't forget. Congratulations. You've come to the end of Forex 101. Please ensure that you ask questions in line with the context when necessary, as I am saddled with the responsibility to answer you immediately. Remember, never to compare yourself with someone else's progress. Take your time and you will understand better. Thank you so much for your time, and I await you in Forex 102. Thank you. And if you don't understand Forex 101, please do well to go through this video again. Our mission here is to ensure that you understand everything. That is how you can be able to duplicate this knowledge on your trading chart and make profitable trades. Thank you and have a wonderful, wonderful day.